Hello, I'm Ricky Lee, and today on the watch list, I'm joined by Nick Tulloch, chairman of ECR Minerals. The company has outlined an initial mining plan for its Ragland project in Australia, alongside internal economic estimates and a broader strategy to expand its gold assets across Queensland. Nick, welcome to the watch list.
It's good to be here. Thank you, Ricky.
Thanks for joining us. So, Nick, tell us, you've recently shared some internal analysis around the initial mining plan at Ragland based on deliberately conservative assumptions. How confident are you in the phase one economics, and where do you see the potential upside as the project progresses?
Well, you're right. The assumptions were very deliberately conservative. We're just getting ourselves started at Ragland, have been over the last couple of months. Alluvial mining is all about the grade, and it's about the volume. And what we've done in our assumptions is we've taken the very lowest grade from the test pits that have been dug to date. We've taken a grade of 0.12 grams per BCM, per bank cubic meter. If that grade is to improve, then on the same volume, you're going to increase the gold recovery fairly quickly. So that's the next task, to prove that actually the grade within Raglan is better than 0.12 grams.
And so Raglan sits within this historic river channel system. So from an operational perspective, what advantages does that type of geological setting, offer when executing the initial mining plan?
So with alluvial mining, you're not going deep. I mean, people think about gold mining as sort of tunneling deep into the ground. At Raglan, we're only going 2, 3, 4 meters down. I mean, the bedrock is fairly close to the surface. So having that old riverbed, is almost that sort of perfect map in terms of where you're going to go. Now, this is Australia, so it's an old riverbed. It doesn't have water in it, but you can still map it out through the ground, and so that gives us that first phase. Now, we're not including any of the gullies, any of the side channels. This is just the initial. This is the initial plan. So that's $7 million at 0.12 grams. That is from the old riverbed, which, if you stand in Raglan, is fairly apparent. As it sort of maps out in front of you.
And the company has also highlighted progress across several other assets too, not just Raglan, right? You got the Blue Mountain and the district scale opportunity at LOLworth. How do you think about prioritizing capital and resources across those projects as you work to kind of maximize shareholder value?
Well, we are very much about production. So we're looking to break the mold. Small cap companies often find a resource, find an opportunity, then farm it out to a larger company. We're doing this in-house. Raglan is the first step, Blue Mountain is the second, and Blue Mountain is a much bigger opportunity just on the scale of the landmass. LOLworth is a bigger opportunity again. And if ECR becomes known in the coming years for being an alluvial miner, generating cash flow, generating revenue, it's a project like LOLworth that becomes something that ECR will be known about for many, many years to come, just given that district scale that it's got. And LOLworth was shown as it's a multi-metal opportunity. But first things first, the first thing is to generate revenue, and that's at Raglan. Second thing is to build out Blue Mountain, and then LOLworth. But in terms of capital allocation, we are totally focused on creating money, and that means we have to be focused on generating production, and therefore investors are seeing that we're talking a lot about Raglan, a lot about Blue Mountain, and that's not going to change as this year evolves.
Well, thank you so much for your time. It looks like you've got an exciting year ahead.
Thanks, Ricky.
Once more, that is Nick Tulloch, chairman of ECR Minerals. For more on the company's gold projects and exploration strategy, visit ecrminerals.com. That's all for this episode of The Watch List. I'm Ricky Lee. Make good choices today.